Hey homies, how we doing? Thank you for joining into another YouTube video. Just wanted to say a massive thank you for 3,000 subscribers. Absolutely blown away. It's been just under a month. Never expected to hit this milestone already, so huge appreciation to all of you. I'm glad that my content is getting out there, getting comments from all across the globe, which is absolutely amazing. That's the whole point I created this. Many people might think I created this to make money. I didn't. Those of you that know, I think you get like $7 per 1,000 views if you monetize your YouTube. I've had the option to do that for the last week. I haven't done that yet. I may well do it, but don't think $7 and I think my biggest video is 8,000 views. It's really not going to change my life. That's not why I've done that. It's like 78 quid. I've done it to try and help and reach a wider audience and just give some free information that you wouldn't get for free. People will charge you thousands and thousands for, and it's not fair. There's people in the world that can't afford to, pay subscriptions or pay this kind of money. So the reason I've done this is to just give out a little bit of free stuff. At the end of the day, if it helps you, brilliant. If you do join Phantom after it, brilliant. Again, we're one of the cheapest subscriptions, so we're not about money. We trade. We're not like other people that pretend they trade and then they just make money from subscriptions. You've always got to ask yourself, if someone's got a silly high subscription, why? So I'm glad that it's getting there. I'm glad it's reaching other people. Anyone that's watching this that doesn't like what I'm doing, jog on, get in the bin, set yourself on fire, whatever it is you want to do with your free time, but just don't put pointless comments or send hate. I'm used to it, been there, done it before with socials. I know that you can't always win everyone over, but I just want to say a massive thank you to all of you that continue to support, like, comment, share. It means the world to me. When we get to 10,000 subscribers, that's kind of the big goal I've set myself. I'm going to do some lower time frame source entries, if you like, just showcasing, lower time frame stuff. I'm also going to potentially give away a couple of FTMOs. I'm going to do a giveaway. I'm going to figure out how, but I'm going to do a giveaway, and a couple of you guys will, subscribers and whatnot, will get a free FTMO. Whether that's sending you the FTMO, which I don't think I'll be able to, so I might have to send you the money for the FTMO. We'll figure something out later down the line. I've got loads of different ideas of things I want to do. As the channel grows, of course, we reach bigger audiences, and I want to give back to you guys, as well as giving out all this content that I'm doing for free with my time. It's a weekend, I could be spending it with the kids. I've sort of taken an hour out of the day to do this video, and it'll probably take me another hour to get it edited, rendered, and create a thumbnail and whatever else. So, please don't get the wrong idea of this. I'm not trying to branch out on my own. I'm not trying to do my own thing. I'm simply just trying to help and reach other people that use YouTube, and hopefully they come across my name, see some of the videos, take value, and it helps propel them in trading. When I learned and always learning, I never had this. If you went on YouTube and typed in FX trading, it was Lambos. Well, it still kind of is. Lambos, Rolexes, give me 200 quid, I can flip it to $1 million. The reality is no one cares if you can take 50 quid that your nan gave you and turn it into $1,000. Doesn't mean anything. It's about, can you treat it like a business, and can you consistently, month in, month out, make consistent profits and essentially keep yourself away from a job if that's what you want, or a second income, again, if that's what you want. It's not about swinging, your schlong about on Insta or social media, trying to entice people in. If someone approaches you and says, hey man, you've got to give me some money to help you, they're not going to help you, mate. They're going to take your money, lose it, and make money whether you win or lose. And that's kind of how the FX industry is unfortunately built. There's only a few communities out there that are genuine. And there's only a handful of people out there that are genuine. There's probably a lot more, but they like to keep themselves to themselves. And you know what? Sometimes I don't blame them, because being a big, not even big, but being on socials and having somewhat an audience, you do get hate, you do get energy drain, and it does wear you down. You have to learn to deal with that. You have to be quite thick-skinned. But that won't stop me from trying to help other people, because at the end of the day, like I said, when I started this channel, if I can help one person, sweet. And that's the power of the internet and social media these days. We can reach such a large audience. Anyway, I'm gonna stop waffling. Big ups to all of you. I appreciate all of you. So today's video, I'm just gonna go over how to build a higher time frame narrative, basically building a story behind your ideas, not just sitting on the 1M like a muppet. These guys that say, oh, we only trade 1 minute and we don't need anything else. They don't know what's going on in the market. they're waffling. They probably do look at the higher time frame, but try to say they don't. They sell you a dream of you can be in absolutely every move. And although you can be in every move, if you want to put the work in and put the effort in, you don't need to be in every move. And that's such a misconception now with smart money. Everybody thinks that every day you've got to wake up and set an expectation of I've got to make this, I've got to do this, I've got to trade. The reality of that is it's absolutely shite. Like, you don't need to do any of that. You shouldn't come to the stream with an expectation. You shouldn't trade with an expectation. You should literally follow an edge, follow a process, repeat consistently, month in, month out, year in, year out. The problem is shiny object syndrome. Someone else is doing bigger and better. Someone else is doing this, someone else is doing that. And we all just switch left, right, and end up nowhere. If you just stick to what you know, stick to why do I trade and why do I need to trade, forget Lambos and that, right? If you're not happy now, you are not going to be happy sitting in a Lambo. You might be for 5 minutes, it'll wear off, mate. You'll be back to your depressed self, if you like. I fully believe that, you know, I've had a lot of battles in my life, and you have a choice. You can either mope, feel like you've lost and life hates you, or you can find a way to deal with it, get back up and control it. You control everything in this right up here, right? It's not about life gave you a hard hand or life's so tough. Yeah, it is tough. There'll be challenges no matter what. I can't say to you, you're going to get profitable, get funded, and it's going to be easy. It won't. You're going to have days and weeks where you're going to be like, oh my God. But you only fail when you stop trying, right? Happiness is a choice, and it's something that we can get from trading, along with freedom, along with time. So all the things you would do when you're at a job and moan about not being able to do, trading allows you to do that. The problem is we leave trading and we go into a 9-to-5 role. We leave a job, and we go into a 9-to-5 role in trading. We chase ridiculous IRR because we think that will make us happy. And the problem is the number will just get bigger and bigger and bigger, and you'll never truly be happy within yourself or your trading. And that's bad, because it means you're always chasing a shiny object throughout the whole of your life. And you're going to get to a point in your life where you're going to go, damn, man, if I just enjoyed things more, I'd be in a much better place. You know, understand the tools and skills that you're learning in trading and what it can actually give you and provide you. I've got some cool video ideas later on as well. I'm going to do a few different things. I'm not going to just do trade stuff. I want to do some more mindset stuff. I want to try and switch it up each week. I'm going to try and make sure there's a video every week. I appreciate any recommendations, things you guys want to see. Just throw it in the comments. You know, whether it's trading, whether it's mindset, whether it's questions, whatever. Throw it in, drop it in, and yeah, we'll get into it. I'm going to stop waffling because I'm probably going to waffle loads on the charts, and I'll see you all in a bit. Peace and love, homies. Homies, thank you for joining me. So in today's video, like I said, we're going to go over like just building a narrative, building a story. It usually focuses on, of course, higher time frame. Higher time frame is king. You can't, I'm not going to say you can't just sit on the 1 minute, because that would probably be a lie, because if you put enough work in, you probably can, right? But overall, people get lost on the 1 minute because it looks very easy to go, oh, look, there's a 1 minute POI, I'm going to trade off that. And, you know, you might get a reaction, but you might get that follow through. And it's when you need to look at the bigger picture and be like, right, why is this likely to happen? And this is kind of how I do a forecast. This is kind of how I set up my charts that I drop in to the Phantom Discord every morning. We do a forecast on a couple of different pairs, just showing you the levels we'd like to trade from, showing you our thought process. You know, a lot of the time we're right, of course we get it wrong. You know, that's the whole point of trading, but it's also about, you know, react and adapt. So if we're looking at this is EU from beginning of last week, so the 11th of October, and I've just cut price. This is the time I'd be on the chart, 6:15 in the morning. And I've just cut it there to kind of go, right, this is how I'd forecast. So if we just go out to like daily, for instance, we can sort of see that, you know, we've taken out huge pool of liquidity, right? And we're yet to truly have a pullback. Now we know when we break strong levels of structure, swing levels, we usually get a pullback. It doesn't mean we have to have a pullback, but we can usually get one, right? Now, obviously, you know, looking left at the moment, we can see we've hit something within these sell to buy wicks. You know, I do think price overall will probably visit some of these areas down here. There's not much stopping it now, considering we closed below these lows. But we've hit these sell to buy wicks, and they could be the catalyst for a pullback, right? So like, okay, we could pull back. You know, we're aware we could pull back. What structure, what's supply and demand, what's liquidity showing us? So at the moment, we can see we're pretty bearish. You can also see that, you know, we took out these lows here and the daily leg closed below. So you do have this buy to sell here, which of course, you know, we could come back into and then see these lows fail. So I'm like, okay, the daily could quite easily run from here. It could, of course, come higher, but you don't want to expect supply is going to fail. You want to wait for it to fail. Until it fails, you need to be following it, because essentially you're following order flow, and you're following the market, which leads to following the money, right? So obviously that's a huge area. I'm gonna delete that off. If we go on the 4 hour, and it's like, okay, what's going on the 4 hour? Well, we can see that, you know, we've been putting in low lows, lower highs. We've confirmed this lower high, strong high. Essentially, you know, it takes out liquidity. It mitigates these buy to sells here. So if I just draw these on, it's mitigated these here. We've then had a clear break of structure, taking out these lows. And of course, you know, since that, we've then kind of had this, we've had this flip zone here where price has come into this demand. Oh, there. Prices hit this. Oh, what have I done? There, right. Prices hit this demand level, it's failed to create a new high, and then this buy to sell has taken out these lows. So we know we've got a valid POI to trade from, and it is within this whole kind of H4 supply. You could refine it to these buy to sell wicks. These are essentially what took out this failed reaction. It was obviously this flip zone. So you could refine it to that, and just be mindful that we're within this. We also do have this guy at the top, which is yet to see a mitigation. This is essentially our extreme. So of course, price could pull back into this. But until that happens, and until we start to see 4 hour levels of supply failing, you know, you essentially want to be following it. From a structure perspective, we can see we're bearish. From an order flow perspective, we can see we're bearish. And we can see that we're kind of building this liquidity. We've kind of had impulse, correction, expecting an impulse, right? That's kind of literally how the market moves. So in this position here, we can say right now, we can theorize this is a weak low. Why is it weak? Because it fails to take out these highs. So at the moment, it hasn't done its job. It hasn't followed through. Therefore, it means it's a weak level of structure, and we can look to target these levels, right? I may do a video on weak highs and lows, like separately. It really is a very simple concept, but it gives you confidence in where the market could likely head. And of course, it's very helpful for trade management. So I've done that. I've kind of built this story, right? And I'm like, you know what? We could very likely take out these lows. So now if I go to the 15 minute, it's kind of where I do all the work. I do use the 50 to 30 minute a fair bit, and sometimes the 10 just to clean POIs up. But, you know, if we go into this now, we can go, right, well, 15 minutes swing wise, you know, we have this as our swing high, we have this as our swing low, and price is contained between this leg. Now, this is where a lot of misconception can happen, and people will start thinking, you know, that we're having all these breaks of structure, we're going bullish. We're not. We've had change of character, which you can, of course, look to play a pullback. But other than that, we shouldn't really be looking for reversals. And like I've said in previous videos, unfortunately, you know, baby pips and just trading in general, it programs us to look for reversals only. And we do tend to miss out on a lot of opportunity, right? So if we're looking at this, you might say, why is that the swing high? You know, well, the way we look at swing structure is essentially, you know, the highest point before the low fails, okay? And then obviously, you know, in opposite, it would be the lowest point before the high fails, for instance, right? Depending on how we move up. So when we're looking at that, you know, this takes out liquidity, and this is the highest point before these lows go. So then we map that as our high. And then obviously, as price is pushing down, you know, we are having pullbacks. But one thing we like to look at is, you know, if the pullback, for instance, once this low goes here, you know, if it's like a 15 pip pullback, for instance, then you can kind of class that as new structure as long as it's multiple candles on the M15, that is. On the 4 hour, you want to see more so 40, 50 pip pullbacks. And on the daily, you want to sort of see 100 pip pullbacks. But on the 15 minute, you know, 15 pip pullbacks, again, test this. Don't just be like, oh, yeah, cool, source. Go and figure it out. Go and see if it works for you. So because we don't have any kind of 15 pip pullbacks within this remains as my high. And then obviously price stops here. So this would be my low. So this is contained within this leg. So I know that we're bearish on the 4. I know that we're bearish on the daily. And I know that we're bearish on the 15 minute. So my directional bias is, of course, shorts. But as we always say, it's great to have a directional bias, but never have a bias as to whether you're buying or selling, because the market can do what it wants. And sometimes if you're so focused on selling, you'll miss longs. Now, obviously, whether you took longs within here, you know, we had a change of character there. We took out that low, we took out that high. So essentially you can play what caused the chock, which was this. And of course you can play longs here, and you can essentially play them knowing you're playing back up into this kind of 4-hour range, which, you know, price has kind of wicked into, and then it's kind of failed to follow through. And then demand has started to hold, right? So if we're looking at this from a perspective of, you know, who's in control at the moment, you know, on the 15-minute, demand is slowly showing that it's in control. It is, you know, it's mitigating. But why is it doing that? Well, it's building liquidity for us to then run, right? Because what we're doing is we're taking out all this liquidity up here, right? We're going to have a mitigation, and then likely we'll take these lows out. And as you can see again, we are literally have impulse, correction, so expecting impulse, okay? So what we need to do now is kind of try and find a level that we want to trade from. Of course, if you trade in Asia or you're trading on Friday before, these are very valid levels to be looking for longs. You know, once this high fails to take out the previous candle low here, so once that high fails to take that out, and we just sort of, do we wick that? Let's have a look. No, they trade at the same, I believe. What we got? 558. 558. So yeah, these trade at the same. So we never actually broke this low. Once you see that, if you were in short here, right, and you see demand hold, likelihood is it's going to come higher. Especially if we come back, have another mitigation, and then demand holds again. These are warning signs that you likely want to be getting out of this trade. We could be coming back into a deeper pullback, and there's a lot of levels unmitigated above us that of course we could mitigate. So if I was looking at this, I would be like, right, well, 15-minute wise, this is a weak low because it's failed to do its job. This is a strong high, and you want to trade away from strong highs. Ultimately, we have a couple of levels here that have not been mitigated, and we've started to build demand that's just building liquidity for us, right? So what we can theorize here is at some point, we're likely going to run all of this liquidity, and this low should be your final target. Once that low goes, likelihood is we're going to pull back. So by all means, you know, if you're in short, you want to be sort of getting out at this low. So if we now look at, you know, potentially mapping things out, we can do this. So we know we've got a 4-hour here, and we know this is the bottom of the range of the 4-hour, of the bigger 4-hour that I showed you, of this guy here, right? So we know that that's, if I just put a line on this so you can see, because I've mentioned before, you know, until price comes into the bottom of those ranges, we tend not to see the true move. Well, as you can see here, we've come into the bottom of that range, and we've seen a move away. And this is definitely valid to take shorts from. You know, it comes into, if we refine this now, it comes into these very, very small buy to sell wicks. So, you know, a completely valid trade. And obviously, if you had a limit on that, laughing, mate, like you're going to make serious RR to this demand. And this, at that point, you could target that demand, see how the reaction is. When it pulls back, like I said, it fails again. You're starting to see bullish order flow, which means order flow is bullish, structure's bearish. Why? Pull back to then run the order flow, right? Order flow creates liquidity. So from a structural point, from a liquidity perspective, and from a supply and demand perspective, overall, we are seeing bearish intentions. And overall, we can now theorize that shorts are likely the target we want to see. But of course, we can be getting in these longs as hedges until we see the valid short. Now, one thing to note here is this hits those buy to sells, but it doesn't actually hit this buy to sell, right? And this buy to sell essentially was what tapped the bottom of this range here. It mitigated the bottom of that range, pushed, and then obviously broke these levels of structure. So you could say to yourself, well, this is actually still a very valid POI. And this is where inducement comes in. Now, people charge you like 20 grand probably to figure out what inducement is. It's literally liquidity, usually structural liquidity before a mitigation. Now, some people like to see it break structure for it to be inducement, and obviously on this occasion this didn't actually break structure, but you know, nonetheless, these levels here, they're building up order flow with our bias that we've created. We could say this might get induced, and then we might mitigate this and then drop off, right? So from a perspective of the morning, you know, we're aware we've got a lot of available liquidity. We're aware that we've got a weak low that likely will become liquidity. Usually a new swing will start very aggressive, and it will be that V-shaped recovery that we talk about. Obviously upside down, it looks like an upside down V. V-shaped recovery like this is literally, you know, aggression in, aggression out. We use it for entries as well. Essentially, we theorize it to be BFI activity. Only they can run price in and out that aggressive. We can't, even if all of you watching this video, if we bunch together on Monday morning and threw down 100 lots each, we're probably not going to move the market like they can. That's just how it goes. It costs absolutely billions to make a couple of pips move on EU. So we're not going to be able to do that. So when you're seeing that, you're essentially seeing a footprint. And from that footprint, you can kind of theorize that you may be following BFI intentions. Okay. So obviously this is very aggressive in, but then notice how it's very flat and corrective out. Whereas this is a very impulsive. And if you do, you know, another thing that we look at is if you measure the time that it took from price to go from that high to make a low, it took 19 hours. And then if you measure the time it's taken to more or less get back to kind of, I know we've had the weekend here as well, but if you look at the time it's taken to get back into this overall 4-hour range, it's taken nearly 4 days, 20 hours. So that's showing you, that's a cool little nifty tool that we use, but basically just shows you that momentum is more to the downside still. And the corrective pullback is just a build-up of liquidity. And what we're doing is we're taking out liquidity on the way up. So there'll be no liquidity left up here. And then all this liquidity underneath is going to get run. So if we look at that, if we're, like I say, I'm not going on lower time frames at the moment. I'm just going to simply use 15-minute stuff still. Let's get the R saver tool out and let's start trading. So this is a valid level for us to look at putting on a short. And in theory, if we're getting in here, we cover the high. We got 3 pips. Beautiful. And we can look at taking out that low. And that's a 1 to 19. Okay. And that's more or less your week done and your month done. And again, going back to expectations and everybody focused on massive RR, that is actually ridiculous. And you need to remember that if you're going for private investment, for instance, if you want maybe a hedge fund to invest in you, they're going to want to see a track record, right? And if you give them a track record and you're making 100, 200, 300 days or weeks, as great as it may look to them, they're going to see you as high risk because they're going to be like, well, you're kind of obviously risking a lot of money to get there. You could take a lot of hits. And overall, they're not looking for those kind of returns. They're more interested in can we make 5-10% per month consistently, because you have to remember on 10 million, on 20 million, on however much millions that hedge funds will give out, and they will give it if they can see that you've got a proven track record and you're not an aggressive, crazy trader, and you're actually a consistent in and out, make your money, job done kind of trader, you know, kind of low risk. They will give you that kind of funding. Okay. If you've got 10% made on 10 million, that's 1 million. Okay. You're not going to receive all of it, but you're going to receive a huge chunk. We're talking about 19% here. You could cut it short at 10% and make those kind of figures. The problem is everybody's so obsessed again with flipping their NAM's 50 quid into a grand because you think it's cool, and it's not. And it's the wrong way to go about trading. It's a business, right? Most businesses in the first year, second year, third year, fourth year don't even make profit. They just have to get by. Most CEOs don't even pay themselves because they're just trying to get by or pay someone else's wages. You have to understand trading is not this, I'm going to get rich quick, I've got Lambos. Yes, there's people that do it. And yes, you can take 50 quid to 1 million, but you do not have to be a successful trader. There's prop firms out there now that can give you capital that you can use to build your own personal, that you can then compound into ridiculous numbers. And you can do all that from just making 5-10% a week. So please, 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 if you're watching this video, forget crazy RR, right? We've been spoiled with the understanding we have in the market, but you do not need that crazy RR. It's great if you can do it. And if you can do it consistently and you love it and you're not doing it for money, you don't need money, then brilliant. But as you're starting out, you shouldn't be focused on, can I be a millionaire in a week? Doesn't matter. Is a millionaire in a week going to make you happy? Probably for 5 minutes, mate. Then you're going to be annoyed again and probably moaning about your life. Focus on being happy now, focus on being content, and focus on how can I action a consistent way to extract from the market, and repeat the process over and over again. Anyway, waffle heads on. So this is a completely valid level to take a trade from. Yes, we have levels higher, but likelihood is we can see this. Now, obviously, if I was trading this myself, I would likely trade off of a 1 minute reaction. Like I say, if we hit 10K subscribers, I will go into some 1M stuff and how I would potentially enter the markets and how we enter the markets of Phantom. That's not like all plug me to 10K, I need it. Again, 10K is not going to make me rich. I'm just trying to grow. I'm just trying to get an audience. I want the stuff like this. Here comes waffle. I want the stuff like this that's free, that's genuine knowledge that I've worked very hard for, and us at Phantom have worked very hard for to get. I want this to reach people all around the world rather than Lambo lifestyle, flip your hands 50 quid, give me 200 quid, I'll make it 1 million. I bought 20 Rolexes, I'm in Dubai, boats and hoes, all that crap. I don't want that reaching all these people like it does. I want the good stuff reaching. I can only do that with your help. So that's why I'm saying if I give even more of an incentive, maybe you will click share, maybe you will subscribe. And with that, it will get us to a bigger audience. That's all the movement's about. So this is completely valid to set a limit on. You could wait for 15 minutes to change character before you look to short from here. Obviously, you know, I don't trade till sort of 7:30 a.m. So I wouldn't be taking any trades off of anything here. I'd simply be waiting to see what happens. So if we just play price on, I'm literally going to play, this whole thing is based, our narrative is to this low. So I'm just going to play the week on to this low. And then that would be the end of it. And this is kind of how we're building our narratives. I may do a part 2 of this and go over a deeper, like something from maybe last year, just pick a random day and go over it. I just want to, I'm conscious of the time. The last one did like an hour. I know some of you loved it, but I don't want to do too long that you all switch off or snooze. And I like to waffle, mate, as you can notice. And if I start going, you're probably all snoring. So trading, if we play this on, that's going to really hurt. Right. So we didn't get tagged. And actually, you know what? This is a great example because we didn't get tagged in this trade, right? And remember I said to you on the last video, you need to theorize again, whether you want to play the open, the 50% or the 25% of mitigations, right? If you're trading the 15-minute, because there will be occasions where it hasn't tapped the 25% like that, and it may well not tap the 25%. And now we have to be in a position to go, I've missed that. What you don't want to do now is throw your toys at the pram and switch off. You need to now focus. So it could come higher, so you could leave your limit on, but you could also adapt and go, right, okay, what else do we have? So we could play this on a little bit, and we can see that demand is yet to fail. Demand has now failed, right? So we started to take out demand, so it's showing us supply is essentially taking control. So if we look back at this and if we're confident, we could leave the limit on here, maybe say we reduce the risk to half risk, and then we can kind of go down here and go, right, okay, what else could this react off? Now, we do have a number of areas. We have this, which we could class as our extreme. I'm just going to go on a 10-minute and see if there's a POI there. So we do have this as the extreme. I'd be mindful we can get more than one mitigation of a POI. So we could still come into this. But you could say to yourself, I'm happy to set a limit here and cover. You could realistically want to cover that. You'd be a bit brave covering that. You could cover that 4 pips and you could play that. And the reason I'm doing that is because we've changed character. We've taken out these highs over here and we've taken out these first lows and demand has failed. So I would track back to see what caused it. There's nothing great here. Obviously, we did have some sort of flip, but it's been mitigate. So it tells me that we could use these levels as inducement because none of them have taken out any liquidity. If you notice each candle, neither one trades above the other. So there's no liquidity sweep. So this is why I want to play the extreme. So you could split your risk here. You could do 50% on this, 50% on that. Not 50% of your account, half and half of the 1%, right? So let's play this on. Let's see if it comes back for us. It may well just die. Looks like it's going to just die. It's fine. So if we move this over, we can look at this and say to ourselves, right, okay, so we could still have these limits on. I'm just trying to clear the charts up a little bit. What have we done? We've come in, we've mitigated these sell to buy candles here. We've had a pullback, we've mitigated this. Let's see if this follows through. No, it's come up higher. This is why you don't remove limits until we start breaking major structure levels. These are valid, right? So that was where we had our original. I'll put this back on now and we'll cover that high. We had 4 pips stop. Now getting in here, you know, in theory, this is to down here, which is a 1 to 13, right? So we shouldn't be, you know, thinking, oh my God, price has, you know, it's gone down here. What you don't want to do is just get too carried away down here and start trying to trade off of this. Of course, this you could have traded, you'd have got a reaction, but it's just like a zone clear out. It then drops more liquidity and inducement for this high mitigation. Now, this still could come higher. This could take us out. But we've covered the high, so we should be all good in the hood. And now it's a case of once you start to see this demand go, it kind of gives us that, right, supply is back in control. Demand originally gained control off of these. And this is why these are really important to mark out demand levels that you could see a pullback from. And if you were in this, you might freak out and think, oh my God, I'm going to take a B. I should have took profit. But your narrative is built, right? It shouldn't break above these levels. And essentially, this is just a reaction to build more liquidity. So all we've done is build more liquidity from this demand. We've pushed up higher, we've mitigated more orders, and now it should run through all of this liquidity, right? That's what we're seeing. Of course, we could be wrong, but overall, that's what makes logical sense, and that's what I would deal with. And like I always say, if somebody else has a different opinion, then whatever, mate, but you've got to focus on you. So let's see if this demand here fails. We might get a reaction off it, might cut through. Right, okay, cool. So we've taken this out now. So again, this gives me massive confidence that we could well start to see, these lower prices. And now it's a case of, do I want to just look to scale in? You could look to trade off of these guys here. You could also be mindful of this wick above. So again, let's play this on. Let's have a little look as to where we're going with things. Why is my mouse not moving? Oh, I thought my battery had died, my bad. So at this point here, we can say, right, that's quite a valid level to trade off. Yeah, I would happily set a limit here. Put our stop above that. Let's see if we get anything. Okay, so it's broken these lows. Now, what a lot of people might do here is start to trade off of these guys. Obviously, this is, yes, it's a flip, but it's very low in the leg. These are the ones where on the 1 minute, maybe you would take an entry because you might get a 1 to 5 minimum out of it. But when you're on solely the 15, you need to prepare that you're not going to get a smaller stop and you're going to need to give these breathing room. So, it may give a reaction like that. And obviously it breaks these lows, right? So if you've got in here on, say, the 1M, completely valid level to trade from, you would probably target those lows because you'd be mindful that this could be being built as liquidity for higher mitigations, or even up here, right? It could come higher. But overall, we're in this and I feel pretty well positioned. You could take some partials off it if you wanted to. Like I say, this is all down to you. It's personal preference. We'll just play this on now, see what happens. Do we come higher or do we just drop? And obviously there's a lot of buy to sell wicks in here as well. So we may not reach these levels, okay? But it's all about reacting and adapting, not just being stuck to one bias. So let's see what we get. Ooh. Okay, so it's missed us. It's judging by this, it's missed us, and it's changed character. See how we take these highs out there, and then we take that low out there. So you could now say that this is a high you want to trade from. It's not, what has that mitigated? Not trading off imbalance. So what's it hit? Just a big ass wick. Okay, so there's nothing beautiful that it's hit. If I can't find anything great, usually, there you go. So it came off these 10-minute ones instead, which were the flip. It was a little bit lower. So we had this hold as demand. It tried to put in a high and dropped. It came off these ones instead. That happens. Sometimes when it's not that clear, that's how it is. If you go lower, maybe the 5 minute, there might be an even cleaner POI there. Yeah, so you can see here, you've actually got a buy to sell candle, and then it breaks. And we had this little bit of inducement above it. It's mitigated this, and we've seen that reaction. So now all we've done is we've adapted, we've reacted, because we've gone, hang on a minute, prices stopped like that and reacted. Why? Oh, okay, we've now made sense of it. So are we happy to now trade from this? Well, I would be. Remember, we're already in short. This is still, this is now New York, London the next day. So I'd be happy to go, you know what, we can trade off of that there, and we can put on 3 pips stop. And if it comes higher, you know what? It comes higher. Like, it's part of the game. So see if it comes back for us. Again, it might miss us. Oh, don't miss me. Yeah. So on this occasion, on this video, you can see the 25% is not being hit very often. And, up here we missed out and up here we missed out. So what we would do when we're gathering data is we would obviously log this at the end of the day, and we would go, right, on this occasion, this one didn't work. On this occasion, this one didn't work. Is it better for me to just get in on the open, right? And obviously, well, in some respects, yeah, if your stop's small enough, why not? Because look, if we got in this, and we had 3.8 pip stop, got tagged in at the open, you'd be in that at the open, and then you've just been tagged in this at the open, right? So now, sorry, we'd have a bigger stop though. Now you can say to yourself, right, okay, you know what? Overall, maybe we don't want to use the 25%, right? And it's just like I say, it's all personal preference. You just need to make a decision and then go with it. Obviously here, right, you can see that these demands have held. This is where everyone gets in long again. You know, we take out this low, we take out this high. So here's a change of character. So everyone's like, oh yeah, we're going to the moon. The narrative is not showing that. All this has done is build huge liquidity. So what's it going to do? Likely mitigate something here and absolutely die. So don't get caught on the wrong side of the market. This is where narrative plays a huge part. Does it really look like demand is winning? No. Supply is in control. So follow it. So if we then go here, we can see that we've reacted to this here. We've pushed up and then we failed. Notice how this high is swept by this candle that mitigates this candle. So this could be a valid level to trade from, and I'm going to trade from it. If I put this there, I'm going to go with the open on this. I've missed a couple. So now what we're rolling with 5.2. And again, where are we targeting these lows, right? Okay, so okay, we get tagged. This one would have tagged 25%. So again, you would take a picture of this and you would go, right, okay, out of 4 trades, 2 tagged, 2 didn't. Am I happy with only 2 tagging? Well, in theory, yeah, because you've got to remember, this is only like 2 days. This isn't a month. It's literally 2 days of price action and you've essentially took 4 trades. So yes, you don't need to. Purpose of the video, it's great that that's happened because it shows you that, again, it's not always the same. What you must do is stick to whatever you decide. So if you decide it has to be 0.25, then you have to stick to 0.25. If you decide it's the open, you stick to the open. If you decide it's the EQ, you stick to the EQ. Okay, and you have to stick with that because that's probabilities. And obviously, if you haven't watched my coin flip video, I highly recommend it, where it shows you about how probabilities play such a huge part within trading. So then you'd get in this trade here. Obviously, you'd be tagged in that now. And it's a case of, right, do we run the lows? I don't think we run them yet. No. So we're just, again, everyone thinks, oh, long. Yeah, long's playing the extreme. It's a weak low. You don't want to trade off a weak low. You can over here when we chop because you don't know it's weak. It could go and break swing structure. But after we've had this corrective move back and you've not seen it follow through with any intentions, the last thing you want to be doing is trading directly off this. This is only pulling back to build liquidity to then run this low again. Okay. So what I would do here is I'd be like, right, okay, well, we have this kind of buy to sell range. We've mitigated these buy to sell wicks. Nothing really clean yet. I think we might just take the lows. Okay, cool. So we may come back into the bottom of this range. And again, this is where on the 1 minute you could look for refinements, or we've got a limit we could put on this. Let's play this like that, stop above those wicks, see what we get. So we've tapped the bottom of the range. So this is where on the 1 end you could react. And if you see it react and set up for your entry model, you could of course take it off of the bottom of the range and know it could come higher. Obviously on the 15 minute, I wouldn't play the whole range personally. It's too big. And it will come to refinements most of the time. In this occasion, it doesn't. But yeah, overall, you can see like, boom, you know, smashed it. We've hit solid RR. We've done 15%, 13%, 9%, 5%. Like you really don't need any more than that. You literally need one of these a week. Even this 5%, this is Tuesday, by the way. This isn't like the whole week. This is just Tuesday, but I've just done it to our narrative, right? But if you did this week in, week out, and you just did 5%, at the end of the month, that's 20%. Remember how much that is on funded accounts. Remember how good that would look if you went to an investor and said, I can do this a month. Remember how much that is on a personal account. It's a lot. And you have to remember, it's about doing it every week, every month, every year. It's not about waking up every day and having to do it. If I wake up and I miss a chance, I don't care. I smile and move on. If I get it, brilliant. You've got to have no attachment, win or lose, neutral. So I hope that helps. I hope that's another video that might help assist some of your trading. And I hope it might give you another insight into how you can obviously map out a narrative. Let me know what you think in the comments. Obviously, I appreciate feedback. I will likely do another one on this. Maybe I'll do a part 2.
There's quite a few things I want to do. I don't want to give too much away, of course, because we've worked very, very hard to build up where we've got to. I just want to give a massive shout out to those of you that have actually joined Phantom since me doing these. And the messages you've sent me is incredible. Like, seeing the progression you guys have had is unreal. And those of you that have not joined but are still watching videos and progressing, that also is just as amazing. So please keep that up. Like I say, if you could just please like, subscribe, and share this with your friends and family or colleagues or your dog or your whatever. I'd really appreciate it. I want to get this movement going to, 10K, and my end goal, I guess, would be to obviously have 100K subscribers. That would be amazing. Everyone starts somewhere. I didn't think I'd have 3K in a month. I have. So who knows where I could be in a year. And it's all thanks to you guys. So yeah, have a lovely weekend, reset, focus, and let's get ready for a huge week. Peace and love, homies.